Hi, welcome. It's Mary Ellen McGonagle here with your Friday afternoon weekly Edge show for August 25th. Today, we're going to take a look at the broader markets and see where we closed for the week. A little bit of a volatility in the air, but certainly some very constructive price action as well. Also, I'll share with you some of that news that drove price action last week. And then last up is viewer question of the week. And that question is, looking for ideal candidates in this pullback. So I'll go ahead and share two of my favorite setups. So let's take a look at some of those headlines that drove price action last week. First up, we did see yields remain elevated, particularly on that 10-year treasury that's very closely watched. We'll look at that chart. Also, big news on Friday. Fed Chair Powell came out with his comments. However, not a whole lot new in those comments. Very common and very much like the FOMC notes from last week, stating that the Federal Reserve feels that inflation is still too high and that we need to be on the lookout for more potential interest rate hikes. Now, from there, we did get some information earlier in the week, and that was flash PMI surveys, and those surveys showed that the U.S. economy is slowing on both the servicing and the manufacturing side. However, later in the week, durable goods orders came in and showed a little bit of strength in the industrial area, showing that that's stabilizing. And then on Friday, consumer sentiment dipped. Overall, mixed on the economic data front. However, we did get news in the U.S. home sales data as it relates to new and existing homes. Existing homes fell to a 6-month high. Existing home sales did fall to a 6-month low, and this is all about high interest rates impacting that area, however, and low inventory. But we did see new home sales rise. Despite the mixed outlook there, housing stocks are deteriorating because of that rise in interest rates and then hence mortgages. Now, next week is going to be very critical. The Federal Reserve is going to be watching every economic data release, and next week we have some really important ones. And in particular, relative to inflation, we're going to have core PCE data for August released. Also, employment data for August, another very key metric for the Fed, and consumer confidence is going to be reported as well. So let's go ahead and get started and see, where did the markets close for the week? And here we are with a daily price chart of the S&P 500. A couple of metrics here that you want to be aware of. And first up is that this relative strength indicator on the daily chart is trending upward, poised to turn positive. We did have a couple of little head fakes here earlier this month. Ideally, we want to get it decisively above that net neutral 50, in line with a close of this index back above this key 50-day simple moving average. This week we did close above the 10-week or 10-day, or just at it. So that's certainly good news, but we do still have work to do. Down here, faster moving stochastics also trending upward, but we will want to get that up above this net neutral as well. And in line, we could then potentially see a reversal to the existing downtrend. As it relates to support, this 4,300 level is very key, so we want to stay above that. And then on resistance, we talked about that 50 and then that 21-day simple moving average. Let's go ahead from here and take a look at the NASDAQ. It was a big outperformer last week, up 2.3% relative to the S&P, up less than 1%. And on the NASDAQ, we can see here too that the RSI is trending upward. We had a brief period where it dipped above into positive territory but pulled back. We're certainly heading in the right direction. Also on the stochastics, super close to getting that up above that net neutral 50. And if we use this mid-March period as precedence, you can see those combined metrics, positive stochastics, positive RSI, and a move above these moving averages, in this case, did in fact put the NASDAQ into an uptrend. Now, one of the other key components back here in March was that interest rates were beginning to recede, so not sure if we're going to see that or not. From here, let's take a look at some of the underlying sectors in the S&P 500. This is a view of those 11 sectors sorted by relative strength. And we're on the lookout for here is potential sector rotation. Also, you want to be aware of where that strength is relative to weakness and make sure that your portfolio is weighted properly. First up here is energy, up here at the forefront despite being the worst performer for the week. For the second week in a row, it was down 1.5%, but net, we do still have a positive RSI and a positive MACD. And we are above this key 50-day moving average. Overall, the uptrend remains in place for energy. Next up is healthcare. It did falter a bit this week after last week being one of only 2 sectors above that key 50-day, and we did manage to close the week back above that 50-day. Now, the momentum with the RSI just below that net neutral 50. We do have the MACD still up here in positive territory, but trending downward. I'll share with you as we move forward some of the weaker areas in healthcare. Also, taking a look at these sectors, we want to take a close peek at technology. This is XLK. We did very briefly on Thursday move up above this 50-day simple moving average, and this was all about NVIDIA's very strong earnings and sales numbers with their revision of growth even higher going forward. However, that rally did fizzle into the close on fears of Powell's potential comments today. But at the end of the day, we are certainly inching closer to a bullish outlook here with tech. Getting up here above that 50 would be ideal on that RSI, that MACD potentially having that crossover, but get that into positive territory as well. Now, from here, what I did want to do is share with you some of the other areas in this market that are exhibiting continued weakness. And first up certainly would be consumer staples, second to worst performer this week. And you can see this overall general decline that's taking shape with these negative momentum metrics. And then also another area to be aware of that is continuing to suffer here, and that would be financials. We're going to take a look at the bank sub-industry grouping, but we can see that it does remain below this key 50-day with a negative MACD, so not an area that you want to overweight. There is strength in some insurance names, but overall, financials are remaining quite weak. From here, let's go ahead and take a look at some of the sub-industry groupings and dig deeper below those sectors. These are ETFs that I use that are super helpful in really staying on top of what is happening beneath the surface of the markets. First up here on that strength side is the yield on that 10-year treasury. It's up here at 4.2. You can see it's remaining above that 4% level, and that's a very critical level, certainly relative to its impact on growth stocks. So keeping an eye on this yield, we want to see interest rates recede. This is that period when the NASDAQ turned positive in mid-March, and you can see how pronounced this decline was in interest rates during that period. Moving forward, taking a look at within technology, we talked about that sector getting super close to turning positive, and here's one of the reasons. This is IGV, the software ETF. It did close above that 50-day simple moving average on Thursday, pulled back, but we are certainly close to potentially moving above that. Again, we do have a positive RSI on the lookout for that MACD crossover to continue to tell a positive story for software stocks. A number of companies coming out with really good earnings over the last couple of days. Now, moving down into these weaker areas, I talked about healthcare suffering, and one of the reasons is this IHI. This is the medical devices ETF, and you can see it's just been deteriorating here since the beginning of August. Now, one of the names that I mentioned I'm going to share with you is a top turnaround candidate, or certainly one for the watch list, is in this industry group. It's gotten very oversold. On the lookout for a potential downtrend reversal, and I'll share one of the names in this group that's looking quite interesting. Let's take a look at semiconductor stocks, because they were certainly in the news last week with NVIDIA. And here we are with Thursday's price action. Semis did rally in line with NVIDIA after their very strong numbers. However, they fizzled into the close, a classic reversal day. And on Friday, they were up less than 0.5%. Now, this is an industry group that is a have versus have not area. There are certain stocks in here that are outperforming it, and I anticipate them to continue to outperform. You can trial my MEM Edge report to get more insights there and get a handle on some of those names that are really holding up quite nicely. Now, from here, let's go ahead and take a look at that healthcare name that I talked about that would be ideal for your watch list. And this is Intuitive Surgical, ISRG. I'm very familiar with the stock. We added it to our MEM Edge suggested holdings list back here at the end of March, prior to this company's gap up on earnings, which then propelled the stock into a nice continuation rally. So if we go back and take a look at the characteristics when this stock turned bullish, it closed above each of its key moving averages. The MACD went up above that net neutral into positive territory, as did the RSI. That's what drew us to the stock. Now, back here, as it began to deteriorate, we did remove the stock from our suggested holdings list. This high volume accumulation was certainly one of the negative characteristics, and then that negative MACD crossover. This pullback was all about the company seeing potentially reduced surgical needs, certainly for stomach stapling procedures in light of Ozempic. But at this point in time, technically on the chart, let's take a look at what may be shaping up. The stock pulled back to this 200-day simple moving average, got into an oversold position, and is beginning to rally above this 10, and then ideally we will want to get it up above that 21-day simple moving average. From my work, I would even be more constructive if it could get up above that 50-day. And in line, we will want to see this RSI get up into positive territory with this black line up through the red, signaling that a new uptrend has emerged. Let's take a look at another downtrend reversal that is not quite as well formed as ISRG, but certainly one that you can keep an eye on. And I will add an extra bonus stock as it relates to a name that already has reversed its downtrend and looks quite constructive. This is AU Anglo Gold, and of course your outlook on gold will have a big impact on whether you're interested in this stock or not. What I'm looking at is technically the stock beginning to attempt to move above these moving averages, which are resistance. Now, of note, you do need to notice that here in late July, it had a similar potential downtrend reversal attempt that ultimately met resistance at that 50-day simple moving average. Similar to ISRG, you'll want to go back to a prior period and use precedents to show you what that reversal actually would need to take place to be positive. First up again, a move above those moving averages, get that RSI into positive territory in simultaneously that MACD in positive territory, and take a look. This is that high volume on those rally days indicating accumulation, and of course we are quite far from that, but one worth watching if you are a gold bug. Now, from here, I'm going to share with you a name that did release their earnings today, and the stock actually looks very constructive. It's in that software space. Let's take a look at the price action coming out of that report. This is Intuit, INTU, and what I wanted to point out to you is the subsequent base breakout where the stock headed to a new near-term high with positive RSI, and take a look, this MACD black line up through the red, signaling a nice potential uptrend. Now, we do have those data points due to be released next week, and we're not on true firm footing here, so you don't want to chase the stock. I've added a 5-day simple moving average. That's this blue line. So any buys in this and certainly other names that are out above their near-term highs, you will want to be on the lookout for a pullback, in this case to that 500 level with INTU. That's it for this week. Everyone have a great weekend. I'll see you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.